If you go back to Tesla's battery day, the way they're looking at changing the battery design, the way they're looking at heat management, the way they're looking at charging, this is all innovation in batteries, and it's just going to get better from here.
I believe that at some point, cost will really become very important, and for this reason, we shouldn't disregard or we shouldn't underestimate LFP getting some traction outside of China.
The fact that there is a more favorable environment for financing for companies that are exposed to the green thematic, I think means that we will see solutions emerging to this whole question of missing capital in the upstream space soon. And it doesn't necessarily have to draw from the capital resources of the downstream customer.
It'll be interesting to see, what type of supportive policies we could see from the government, the U.S. government or the European government to encourage this. And also this kind of regionalization trend needs to be overlaid with, I guess, ideas or concerns about a greener battery.
Good morning, everyone, and welcome to another one-to-one Mining Investment APAC online content session. Today, for the batteries panel, we have James Stewart, Portfolio Manager of Global Resources at Ausbil Investment Management. We have Tim Bush, Executive Director, Global Coordinator for Electric Vehicle Battery Research at UBS. Sophie Liu, Head of Metals and Mining at Bloomberg NEF. And Henrique Ribeiro, Latin American Metals Editor at S&P Global Platts. So thank you everyone for taking part in our panel today.
Thank you.
I guess to kick things off, we can talk a little bit about metals pricing. So there's been a recent bull run in lithium, cobalt, nickel, and others. Where do you see prices heading right now? Maybe Henrique, do you want to kick us off there?
Sure. Yeah, so just for those who are not familiar, our main activity at Platts is exactly assessing prices, and in this case, battery metals pricing. And what we've been seeing very clearly is that talking about lithium, cobalt, and nickel more than anything, we've been seeing a very clear uptrend recently. And this is obviously supported by rising sales of electric vehicles. There's definitely a push, especially from Europe. And I'm sure we will discuss this furthermore later in this panel. But yeah, definitely this is the main driver pushing prices up. Talking specifically about lithium, it's very interesting because this uptrend has been so much earlier than many people in the industry expected. There was a consensus for many times that lithium prices would not stay at the bottom levels that we've been seeing last year, but it was not very clear when this rebound would start. And we've been seeing Chinese spot prices, especially in the case of carbonate, rebounding since mid-September, early to mid-September of last year, and this trend gained steam, especially since the beginning of this year, on the back of increased LFP use in China, and probably this is also another important topic for us to discuss going forward. And the conclusion is that probably the oversupply that people believed existed in the industry was not so big. So everybody was really caught on surprise with this price rebound. And it's not so different when we talk about cobalt and nickel. Obviously, we've been seeing nickel prices on the LME falling sharply recently since they peaked in February the 22nd. But the fundamentals are still very strong. So we're talking about a market that reached some surplus last year because of the pandemic more than anything. But our colleagues at S&P Global Market Intelligence do expect this surplus to narrow this year significantly, and this will soon become, in the coming years, a significant and growing deficit. And for cobalt, it's the same. There are obviously logistic disruptions that got worse because of the pandemic during the second half of last year, and this is still persisting. So when you combine this structural supply-demand imbalances and the bullish feeling that we have at the moment because of the EV surge, this is definitely very bullish for prices. So although there might be some volatility, and you take nickel as an example, and what's happening at the LME at the moment, and starting to affect the chemicals prices, but keeping this volatility aside, if you take at the big picture, long-term picture, there is definitely a consistent uptrend for battery metals prices in the coming years.
I'm not sure if any of our other panelists want to comment on the pricing, or.
Yeah, I might jump in there if you don't mind,
Yeah,
Amy.
sure.
So certainly 100% agree on the outlook on pricing. I think probably part of what surprised the supply chain, I think, is the speed at which electric vehicle sales increased in China, obviously, but also the speed at which Europe and the focus on EVs came through from Europe, and more recently thematic flowing through to the US as well. So I think the supply chain's been surprised by the demand aspect, but likewise, I'd also probably argue that the supply chain, to Henrique's point, the supply chain did expect that there's probably more product available. So if you look at the lithium market, broadly, the view from customers is that you can buy plenty of lithium. Or I should say the view was you could buy plenty of lithium with plenty of projects running below capacity and able to scale up. And there's a few of those which have been put on care and maintenance in Australia. So for instance, Altura and Wodgina. Mm-hmm. But what we actually have seen with those projects is those projects haven't come online to meet the demand that's expected in the short term in the lithium market, at least. So I think at the moment there's a little bit of a scramble going on in the market to try and secure supply. Now, if you speak to the sales and the producers of lithium product, whether or not it's spodumene or carbonate or hydroxide, 6 months ago, you couldn't get certainty around shipment volumes and timing for customers. You go to the last quarter of last calendar year, and customers were keen to lock in volumes and dates for shipments, and now all of a sudden there's that scramble going on where the product's not necessarily available. So I agree with Henrique entirely on the lithium side that there's a lot of demand coming through. And I don't think the supply chain is prepared for the bottleneck in the short term. So we're of the view that lithium does increase in the short term. Nickel's another interesting one as well. So we have seen the nickel price fall recently on those announcements around Tsingshan, a nickel pig iron producer, possibly being able to supply the battery market as well. Now, again, I think this is an interesting commodity whereby the main demand for nickel at the moment is obviously stainless steel, but in time that increases to a larger proportion of the nickel market flowing through to batteries. Now it is technically possible to convert nickel pig iron to battery precursor, but what we don't know at the moment is what the cost of that is. So Tsingshan's done a phenomenal job in building large volume, low cost nickel pig iron production. I'm sure they will do well in the process they choose to move down, but we don't know what that cost is. So you can't get nickel out of nickel pig iron easily. It costs money to refine, it costs money to extract. So the market's really been shaken in the short term around that announcement, but we don't know what the economics are yet.
Yeah, I'm sorry. Please go ahead, Sophie.
No, that's good. I think we've already fully discussed the dynamics of the lithium prices, but I might add a little more on what's been going on with nickel and cobalt. Within BNEF, we've done some modeling around the conversion of Class 2 nickel producers, particularly of NPI, and whether or not it would be technically feasible for them to convert to producing nickel matte. This is not new to the Indonesian market, of course, so Vale already utilizes that process, and they provide a feedstock for Sumitomo for further additional conversion into battery battery grade chemical. The Qingshan, they'd already been pursuing other pathways to battery grade nickel through the HPAL project that they are working on in the QMB and New Energy Materials project. But obviously QMB has faced some recent setbacks because the Indonesian government is focusing more on environmental standards as they're courting some of the battery manufacturers. And there have been some controversies around the utilization of deep sea tailings placement for the HPAL projects. And so QMB did have to back out of their application originally to use DSTP. The fact that Qingshan is now also exploring converting NPI capacity into nickel matte is probably a reflection of the fact that they're trying to diversify their pathways to class 1 nickel. When we looked at it, so not all class 2 nickel, not all NPI producers are suited to convert into nickel matte. Qingshan obviously is in the pilot phase. The fact that they're able to bring it on by October in terms of commercial volumes is kind of interesting. That's quite fast, considering that they only started piloting this process last year. And then in terms of additional processing costs, a lot of it, it's not very uniform, and that's part of the reason why I think there's not a lot of very good cost estimates out there for that premium. But it can, if you're looking at it's basically there's going to be, it depends on how large the scale that they're looking at in terms of the volume that they're going to be directing towards nickel matte, and how much additional capacity that they're planning to retrofit essentially. So it wouldn't be perhaps, it's definitely not as expensive as building from scratch, of course. They have natural sort of advantages in that sense, but we are not looking at a crash of nickel prices like we experienced when Qingshan first disrupted the class 2 nickel space. So I think that this initial sort of almost knee-jerk reaction in the market is more a reflection of the fact that nickel was overpriced to begin with, considering that the market is still oversupplied this year, and not necessarily the fact that even at the sort of reduced nickel price that we're looking at this week, it's still, according to our estimates, within that range that is a sort of a long-term supporting price for new class 1 nickel refining capacity to come online. So it's still within the range. $20,000 a ton was always a little overreached anyways, I think. Yeah.
Henrique, did you have any follow-up for that?
Yeah, I was just going to add something to James' comments, and I completely agree. But also Sophie also touched a little bit on that, which is the HPAL progress and how uncertain it is, right? Because the HPAL history has been always very troubled, and not all projects were successful. Actually, it's maybe quite the opposite. There has been several projects that were not really successful at all when it comes to HPAL. And so in terms of nickel supply going forward, it's definitely a big question mark if we're talking about battery grade nickel, about real product that can be used as a feedstock for batteries. So this is also something that we will have to keep an eye on going forward.
Might just throw one other thing in there, if you don't mind, Amy, is just so Sophie mentioned the environmental impact of HPAL. It's worth also just remembering that the production of nickel pig iron, particularly in Indonesia, probably isn't overly environmentally friendly as well. So if you look at the processing method, including furnaces and coal-fired generation using Indonesian coal, it's probably not that environmentally friendly. So if you look at the potential markets for this product, there will be markets without doubt, but it probably isn't going to those markets which are focused on the carbon impact of battery production, as opposed to the markets which are less concerned about the environmental impact.
Yeah, absolutely. And I guess we can shift gears a little bit now. There's been a lot of talk about kind of the OEMs getting involved at the mining or production level. So looking at this kind of vertical integration, how much is too much? Where do you see things going? I mean, Tesla has had an announcement this week regarding their involvement with a nickel company. where do you see kind of this trend heading? Maybe we can kick off with Tim for this one.
Thanks, Amy. I would just make an important point about the upstream metals price risk and where it lies today between the battery makers and the OEMs. If we look back to 2017 and 18, the last upcycle of pricing, the battery metals price risk was all with the battery makers. So that was a period in time where they saw, tremendous margin pressure. And the outcome of that was that they renegotiated all of their legacy contracts and new contracts to have full raw materials or metals pass-through pricing. So right now, the battery makers do not carry the metals price risk that they carried 3 years ago. So it's a very different dynamic for the battery makers. So I think that, if we looked at 2017-18, it was the battery makers that were looking to potentially vertically integrate into the mine to hedge that price risk. So I guess the question now would be, will OEMs kind of, now that they're carrying the price risk, follow? Personally, I think that it's the legacy OEMs have to be very selective where they deploy capital right now. And, in our view, probably the battery system is an area where they absolutely need to invest. And that would include bringing in the battery pack, the battery cooling system, and a key piece of software, the battery management system in-house, as opposed to the battery cell like Tesla has done. I think that it's more likely we see a joint venture model, something like what General Motors has done with LG Chemical, a 50-50 JV for capacity in North America. I guess the other area that maybe a little outside the mining scope though but it's certainly competing for investment dollars with the OEMs, is the software side of things, right? Because the legacy OEMs are probably lagging Tesla on the software experience. So you really kind of have to look at, the OEMs have a lot of areas they could potentially need to invest. How much of the battery cell do they want to bring in-house, upstream, and then the software side. So I would tend to think that, at least as of yet, we haven't seen, huge indication of investment, but I think there are some selective investments that OEMs would make into the upstream metals. But I think that the priority right now is probably more on the battery pack, the battery management system, and the software.
Yeah, I would completely agree with Tim on that one. I think the only reason why you do see some of the legacy OEMs or even the battery manufacturers considering even any equity placement in the upstream is because a lot of the battery metals, the minor metals, don't have well-developed hedging tools in the market for them to manage their risk exposure. That's essentially what the issue is. There is no futures market for most of these minor metals. And so their sort of traditional mechanisms for controlling this risk is not there. The market is just too early stage. They do have to be extremely selective about whether or not they would even take equity placement. But I think in general, the kind of consensus in the market is that it's really beyond their operational excellence to their operational competency to be looking at that far upstream. And really what they should be doing is probably just guaranteeing longer term volumes of offtake, which then essentially stabilizes revenue streams for these upstream producers, who then can take that to the bank and get better financing terms from either the equity or from the debt side. I think this question of missing money in the upstream side is something that will kind of resolve itself as we are entering a sort of new boom on metals and materials investment cycle. Traditionally, the larger, more capitalized players in the market have been staying out of battery metals or more sort of strategic metals because they're quite frankly too small for them to bother. But after coming out of this kind of period of low capital investment, we do expect there to be an uptick in their participation and therefore more volume of money going in, more mergers and acquisition, and then of course some of the default producers, and like for instance, especially lithium, are now looking at more equity placement as well, right? So more share issuances. They're also getting more favorable debt terms. So if you look at, for instance, bonds that were issued by Albemarle back in 2014, their coupon rates were, 5%. But now their new green bond, now Livent and Sigma and a few other lithium companies are looking at green bond issuances with coupon rates of 1 to 2%. Of course, that's a reflection of the change in the monetary regime as well, but still, the fact that there is a more favorable environment for financing for companies that are exposed to the green thematic, I think means that we will see solutions emerging to this whole question of missing capital in the upstream space soon. And it doesn't necessarily have to draw from the capital resources of the downstream customer.
I think just continuing from Sophie, I think OEMs don't necessarily want to be involved in the mining process and don't want to have that risk on their balance sheet in terms of having to invest. But the problem is over the last few years, we haven't had that capital coming to the market as yet until, as Sophie mentioned, more recently, we've seen SQM raise money, we've seen Albemarle raise money, some of the smaller companies raise money to develop projects in the lithium space at least. But there is a gap that's going to need to be filled, and that will be filled by new projects which need to be funded. So if you look at the OEMs, typically, as Sophie mentioned, they've done offtake arrangements. So if you look at Tesla, they're very good at doing offtake arrangements on a long-term basis, which then allows mining companies to go to equity markets and capital markets to then build projects. But certainly the traditional OEMs don't seem to be or don't want to be involved in the process of mining.
Yeah, and I think in the end of the day, and I would really like to hear your opinions from all of you about this as well. But I think in the end of the day, maybe it's just too much for the OEMs because it's a completely new business for them. So it's just too much that they need to learn from zero, basically. So why getting involved in something else and an activity that is particularly complicated, such as mining, if they already have a lot on their plates? So I don't know. I would be curious to hear your thoughts on this as well.
I agree. Mining's not simple. If you look at long-term mine development, the risk around commodity risk, cost risk, etc., it's a business that the OEMs aren't used to. And to Tim's point, these guys have got plenty on their plate already, developing their products, getting their products up to spec, and getting their products to customer acceptance. So I agree. It's a different area to what OEMs are used to. They traditionally haven't been involved in mining operations, and it's a very different expertise.
I agree with everyone else that it's particularly what Sophie was saying about the offtake agreements, or maybe it was James, about them being able to, once the producer has an offtake arrangement, that would in fact allow them to go, to the equity markets and be able to raise capital. And I think that actually that, at least from investors that I'm speaking with, it's been a point that's maybe been missed about that dynamic. And how that financing dynamic.
Okay. And so nowadays, coming hopefully out of the COVID-19 pandemic, we've seen a lot of different stimulus measures helping to boost domestic production and to kind of really boost the markets for EVs. So who do we see leading the way right now? I know it seems like Europe has maybe overtaken China as one of the kind of top markets these days. What do you see happening on that front?
Yeah, I think it's important to emphasize that Europe and China, at least in my perspective, they are in completely different stages of the EV story. So China started so much earlier to drive EV adoption, especially through subsidies policy. And now they're in a much later stage of removing those subsidies. So the market grows in a more, let's say, organic way. And Europe is completely the opposite. So maybe Europe is right now, it's where China was years ago when China started deploying the subsidies policy. And so it's not a surprise, or it shouldn't be a surprise, that EV sales are growing faster in Europe than in China right now. It's completely subsidies driven, and it's a consequence of, as I said, of the different stages where both of these regions are, and obviously the pandemic. You mentioned the pandemic in the question, played a significant role on that, since much of this subsidies policy in Europe flourished as a consequence of the pandemic, or as part of the stimulus plan to recover the European economy after the pandemic. So it's directly correlated. I don't know, but this is my perspective. We'll keep seeing European EV sales growing faster than China for a while. But in my opinion, this is because these regions are in different stages of the cycle. I don't know if you guys would agree with that, but it's how I see it.
Yeah, so in 2020, you're right. Europe actually overtook China for the first time as the largest EV market in terms of new sales. For this coming year, we actually do expect to see the two of them relatively balanced. So not necessarily, it's kind of a toss-up as to who will be larger in terms of total sales. There's a bit of an uptick again in China because they've relaxed their original schedule for decreasing EV subsidy supports in order to give the market a little time to recover after the pandemic kind of hit the market in an unexpected manner. So they've actually delayed their sort of cancellation of the subsidies by, I believe, another year or so. And then with Europe, you know, they've introduced subsidies for a couple of years now, for more than a couple of years. But I think what just kind of caught everybody by surprise was how strong support for EV procurement, particularly at the public sector side, remains so strong in Europe, despite the COVID-19 pandemic. And I think that's kind of what, so Europe sort of outperformed everybody's expectations, and then everyone else, all the other markets sort of did what we expected them to do during a pandemic. And then the US continues to unfortunately be lagging for at least under the sort of relaxed regime under the Trump administration. But now with the Biden administration coming in with sort of its new targets and new procurement goals, we do expect to see that market to gradually recover over the next couple of years. How this translates into supply chain localization and securitization, that's a slightly different sort of dynamic, right? I would say that Europe leads the US in terms of attracting local investment and both downstream and upstream capacity expansion and growth. Part of it is probably because the investment environment in Europe for particularly Chinese firms is ever so slightly more friendly, given the political dynamics between the US and China right now. So there's no shortage, I'm sure, of Asian companies, particularly Chinese companies in the battery space or the raw material space, who would not be keen to invest into the US market in order to have localized supply chains. And they're fully aware that US automakers would prefer to have supply chains closer to them, and rather than importing things from Asia. I don't think it's a lack of will from the Chinese company side. I think it's a political barrier in the sense that they do not have the option to be investing into the US right now. And so their energies are more focused on Europe, whereas of course the Korean and Japanese battery makers have been much more diversified in their expansion and in terms of cross-investing into many different regions. But the Japanese and Korean companies are not as fully integrated on the upstream, particularly the raw materials and metal side, as much as the Chinese firms are, right? And so that reflects the reason why you see there being diversification investment in battery cell manufacturing, as well as to a certain degree cathode precursor material investment in Europe, but not so much in the US yet. Yeah. So I think some of it has to do with essentially who are the dominant players, who has the capital, who wants to expand, and where they're allowed to go. Yeah.
I would just add one comment that Sophie touched on, which is the supply chain regionalization. I do think that this is an increasingly important aspect of the market. I mean, a lot of players just look at the battery makers and look at the absolute capacity that these companies have, and then say, okay, company A has much greater scale than B. But in fact, I think that we do need to look at it on a geographic basis with, it's not just important about the absolute capacity, but how much capacity each company has on the key OEM manufacturing continents. So China, Europe, and North America. Clearly, Europe now is kind of leading North America in the localization trend. In 2018 or 19, I think we had effectively zero battery capacity in Europe, and now we have LG Chemical, Samsung SDI, SK Innovation, and CATL, Chinese battery makers, starting capacity in Germany this year. And then interestingly, we're really seeing all the materials companies like cathode, anode, separator, all following the battery makers to Europe. So I think that North America will be the next region to follow this trend. And then, of course, from a policy perspective, it'll be interesting to see, what type of supportive policies we could see from the government, the U.S. government or the European government to encourage this. And also, this kind of regionalization trend needs to be overlaid with, I guess, ideas or concerns about a greener battery. I think Sophie was talking about how much of the upstream supply chain is in China, so like precursor and a lot of the battery metals. And there is a desire for, let's say, greener batteries, and this seemed to be another thing that's happening with the supply chain regionalization, let's say using hydropower to produce some of these energy intensive battery materials. So I really think that, in thinking about the battery companies themselves, you need to think about their scale on each continent. And I think from battery materials perspective, you are going to see more geographical, let's say, diversification away from reliance on China in the upstream. And in fact, that could result in more relative cost competitiveness on the material side. China's clearly leading in materials costs, and relocating supply chains to Europe and US would boost the cost competitiveness of these regions. So that's the comments I would make on the battery side on this trend of regionalization.
I think the motives behind it are interesting as well. So sure, there's a certainty of supply argument whereby you may want to diversify away from the Chinese supply. But if you look at Europe, again, Europe is a very dominant, or has a very automotive focused workforce. So by regionalizing the entire supply chain all the way down to mining, you're effectively creating jobs in this new sector, which can replicate automotive jobs or internal combustion engine jobs, which would disappear over time if it wasn't for that investment. If you look at what the European government's doing around financial incentives, around carbon footprinting, around traceability of batteries, you can see that that's what they're doing. And to the point on the US, we're obviously at a very early stage, but that looks like it might be creeping through in the US as well. So again, there's different motives for this. I don't think all of them are financial. Some of them are environmental, some of them are labor, but it certainly is a trend that we're seeing.
Yeah, there's some argument to be made of how much of the whole decarbonization trajectory might actually just be disguising reshoring, and sort of more underlying political impetus to support supply chain / job development.
Yep, agree. Yep.
Yeah, that's definitely an interesting component. And then one more supply chain dynamic that's happening in the US right now that we're watching very, very closely, because it could have major implications for the viability of new battery manufacturing as well as supply chain development in the US, is basically the SKI LG Chem dispute. So SK Innovation has been ruled by the International Trade Commission that they were in violation of IP issues with the LG Chem, and may be banned from essentially producing and importing parts to the US for about 10 years. So this can have pretty big implications for the viability of some of that production capacity that's supposed to be coming online in Georgia. And we are watching to see essentially whether or not the Biden administration may have to intervene, or if SKI and LG Chem can arrive at LG Energy Solutions, not LG Chem anymore. If LGES, if they would be able to arrive at some kind of compromise. These kinds of legal disputes and the risk that they pose to the development of the supply chains cannot be discounted. If you think about, for instance, why LFP does not really have a market share outside of China, it goes back to, I guess almost 10 years ago now, of the IPU dispute between a few of the European cathode producers and the Chinese cathode producers over who essentially stole stole the science in terms of the production of LFP material. So that's a really interesting implication, and part of the reason why LFP is not, for instance, being exported to markets outside of China right now is because of that dispute. Essentially, there is a penalty that's paid if they try to export that technology. Yeah.
That really leads well into the next question that I was going to bring up, talking about battery chemistries and the resurgence of LFP in China. I guess, is there the chance for that to that technology, that chemistry, to be brought outside of China? Where do you see kind of chemistry for batteries heading over the next few years?
Take a first crack at that question. I mean, I think that, clearly the iron batteries have, let's say, relatively less energy density, and therefore, when we think about the vehicles, the type of vehicles that could take an iron battery in the overseas market, you would be talking about the lower end, mass market, where vehicle weight is lower, and therefore you could get a reasonably competitive range. And at the same time, though, there is performance issues in terms of measuring the capacity and cold weather operation. So those are kind of the, let's say, the challenges that LFP faces. I think that we can say without a doubt today that at a system level, the iron battery has an absolute cost advantage over the nickel chemistry, which is dominant outside of China. However, when we look at the future cost deflation of batteries, or let's say the visibility of cost deflation, we see much greater cost deflation potential for nickel-based batteries. And in fact, we estimate that nickel battery will overtake the iron battery in cost competitiveness before 2025. So therefore, our kind of view on the iron battery outlook for the overseas market is, we could see something transitional. And in fact, I think some iron batteries have already gone into the European market today. But in the long term, probably we stay with nickel batteries. And I guess two other points on the iron batteries is, first of all, if you're talking about a lower range vehicle and you look at Europe and North America, unlike China, those two markets have, consumers want a lot of range. And so, especially North America. So until the charging infrastructure gets built out and people are really comfortable that they could charge up wherever they want to, I think it'll be very tough for a shorter range vehicles to easily gain share. And then the second point I would make is, again, on the dependence of China. These iron batteries, as someone else mentioned, they were commercialized in China. There's been, the entire supply chain is in China. China's been doing it for a decade. So in fact, the shift to iron batteries would actually be counter to a lot of the policies that we're seeing in Europe and North America, or policy direction, in that it would actually increase the industry's dependence on China. So far, from the Korean battery makers I've looked at, they have the ability to produce iron batteries, but I don't think they actually believe that they have any real cost competitiveness relative to the Chinese players, and therefore have shown very little interest in adding, iron battery capacity to address maybe the lower end of the market.
I might just jump in there if you don't mind. So I think it's interesting to look at the innovation side and the development of batteries over time. So my understanding, and correct me if I'm wrong, but if you look back 18 months ago, the density of LFP batteries you can get at the moment wouldn't have been expected 18 months ago. And in part, that energy density requirement was driven by China subsidies and a requirement to squeeze more density into a lower weight unit. So you've had innovation in batteries. Now, my view is this continues over time, not just on LFP. So yes, LFP will get better, but so will NCM. So if you look at what's produced now, in 5 years or 10 years, the quality of batteries and the performance of batteries will be much higher. The internal combustion engine and vehicles, there's been innovation in that area for 100 years. Batteries is relatively new, so there's still investment going into R&D. If you go back to Tesla's battery day, the way they're looking at changing the battery design, the way they're looking at heat management, the way they're looking at charging, this is all innovation in batteries, and it's just going to get better from here.
Agreed. Yeah, the runway for the LFP technology is a little bit more limited than NMC in the longer term. At the cell level, a lot of the improvements that we saw, as you mentioned, in the last 18 months were in the pack design rather than in the cell design. And there's only so much runway you can in terms of the physical constraints of being able to fit how many cells into one pack and reducing, other sort of like quote superfluous, well, potentially superfluous material that adds to the overall volume of the battery pack. I think one of the big constraints on the NMC side, well, I would highlight two risks going forward. It is the BNEF view that's technology going forward in the longer term, particularly from 2025 onwards, is still going to be high nickel focused, right? So I absolutely agree with the panel on that one. Two risks that might derail / maybe slow the progress ever so slightly is one on the cost side, right? So there's issues around the availability and cost of nickel and whether or not this may be raising the raw materials bill for the NMC pathway, and hence why Elon Musk has been so vocal about nickel on his Twitter feed. But that aside, one of the views that our battery team takes is even in the sort of mid-20s, if in mid-2020s, if we are looking at a potential need to shift away to lower cost raw materials built because of the high cost of nickel, the NMC pathway is not closed. A lot of battery cell manufacturers are now looking at increasing the volumes of manganese to displace the content of nickel. So manganese and nickel are not 100% interchangeable, but there is to a certain degree the ability to up the N side of it rather than the N side. Cobalt present to kind of stabilize the overall chemistry. So that's good. The second risk, I think, has to do with the amount of announcements that we've been seeing in terms of explosions and fires, unfortunately, with some of the NMC chemistries that have been deployed. Now, there's arguments as to whether or not it's a problem with the underlying technology or if it's with the manufacturing defects or with operations and essentially the operators themselves not knowing how to utilize the batteries correctly and in a safe range. But if major recalls have to occur for a lot of models, which has already hit a few of the automakers and a few of the battery makers in terms of the recalls, the financial and if the regulatory tide shifts, this could potentially delay deployment on the high nickel side as well. So these are two risks that I would want to highlight from a technology point of view. They're not necessarily related to the technology itself, and is really more sort of the outside reception to it or the outside conditions to it. Yeah.
A follow on that point about the battery fires, we actually UBS hosted a call with Nobel laureate Stanley Whittingham, and he's actually the inventor of the rechargeable battery. And I was asking him, could these battery fires that we're seeing be a barrier to adoption, or could it derail let's say nickel chemistry? And the comment he made to me is, look, Tim, if somebody suggested that we should put petrol, a tank of petrol under your 2-year-old, and then have an engine pumping this with explosions, the chance of like ICE vehicle getting adopted today would effectively be 0. So while every battery is we are gonna have safety issues, there are gonna be battery fires on the way to full electrification. At the end of the day, it really is, to Sophie's point, it's about kind of consumer acceptance of this. Because the safety still of the nickel-based batteries, even relative to internal combustion vehicle, in terms of like explosions or fires, I think per million miles driven, batteries still are safer. So it really will be a critical factor of how like consumers see it. And that was kind of his comment.
I would like to say a few words about LFP, and maybe maybe my opinion is a little bit different from everyone else. But personally, I tend to think LFP will have some market share outside of China, and for just a few reasons. Personally, I have difficulties to imagine NCM, especially if it's nickel rich, if we're talking about really 811. I have difficulties imagining it getting cheaper or getting a cost advantage relative to LFP, especially considering the the nature of nickel, it's naturally a much more expensive metal than just iron phosphate. And considering the price scenario that we were discussing in the beginning of the panel, nickel prices are very likely to keep going up. So personally, I believe that LFP should keep a lot more cost effective, to put it this way. And regarding technology, I mean, definitely there can be improvements on both kinds of cathodes, any kinds of cathodes actually, and even some other kinds of cathodes that we didn't even discuss, such as LNMMO or LFP with manganese or other things that are being tested in lab. But the thing is that we will get so much energy density, so much higher energy density from other improvements outside the cathode, such as increasing the use of silicon in the anode, or in the future, maybe 10 years from now, or who knows, solid state batteries, lithium metal anodes. So I don't know. My feeling is that definitely this decade should be dominated by NCM and nickel-rich chemistries, especially in Europe. But as I said in the beginning, Europe is in an early stage of the cycle. At some point, subsidies will be gone, and cost will be essential. And when we get to this point, when cost becomes so important, we'll probably have a lot of other improvements, as I said, in the anode, or maybe regarding solid state batteries, that will provide so much energy density. And maybe in 10 years from now, the cathode chemistry discussion, maybe it will be relegated to a secondary role. Obviously, I'm talking about maybe 10 years from now. It's impossible to predict. I'm not saying this is going to happen, but still, I believe that at some point, cost will really become very important. And for this reason, we shouldn't disregard, or we shouldn't underestimate LFP getting some traction outside of China.
I think that brings me to kind of my last question, really just asking the panelists, beyond chemistry, EV uptake, what are some of the trends that I guess you're expecting to see over the short term? Maybe James, if you want to kick us off there.
Sure. So I think probably the main one that we see coming through, and I think it's less obvious where we sit, but overseas, certainly there's a huge thematic towards green energy, renewables. It's just phenomenal. So at the moment, it doesn't come down to purely economics. And as we talked about subsidies, we talked about supply chains, the emissions from your battery production. I think that's one thematic that is increasing and will continue to increase is the impact of EVs and the impact of producing EVs on the environment as well. So I think certainly from our perspective, that thematic is incredibly strong and getting stronger. It's hard to see internal combustion from my perspective, making any sort of comeback. So I think the trend's intact. Sales are increasing, customer acceptance is increasing. China's been producing EVs, as we talked about, for many years. The Western producers have had to leapfrog, with the exception of Tesla, have had to leapfrog in terms of their development process. EVs are getting better, the customer acceptance is getting better, the quality is getting better, and that flows through to sales.
Continuing on James's comment there, Yeah, we may not be seeing as much EV adoption so much in the Australia market, but the Australian producers who are in the supply chain are moving very quickly towards the green thematic. So between Twiggy's commitment on setting up the new Fortescue Future Industries Fund and the fact that they're basically redirecting a certain portion of their annual revenue towards investing into renewable energy, if he even remotely gets close to his goal, he's going to be producing more renewable energy than all of Australia. So that's going to be super fascinating to see. And then companies like BHP with their new nickel sulfate refinery in Cubanana are already agreed to a PPA where they're procuring about 50% of their electricity load from Ryzen. So that's going to be solar power, and that significantly helps to that helps to reduce the carbon emissions intensity of their nickel sulfate produced. It's a really smart move, really, at the end of the day, because obviously, the automakers and the battery manufacturers have certain life cycle emissions commitments that they need to achieve. And right now, the sort of deciding factor between them buying certain material from one producer versus another, obviously everyone is negotiating certain pricing, but at the end of the day, your most pricing is going to be relatively equal in terms of competitiveness, and it's really about distinguishing yourself in terms of your supply chain carbon intensity or emissions environmental performance. So somebody like BHP being able to, say that they're sitting on the lower end of the carbon intensity curve secures them the better quality offtake contract, right? And then actually, if you look at the economics of renewable energy these days in markets like Australia, yes, you may not be able to achieve 100% of your energy load as an industrial producer that needs, pretty continuous power supply. You may not be able to achieve 100% of your load with renewable energy, but you can get pretty darn close and still keep your overall electricity bill at the current cost that you're paying, or potentially even lower. So some of the modeling that we've looked at, a lot of mines or metals refineries, depending on the PPA that they sign in the region they're located, they could be getting close to 40 to 60% of their power load with renewable energy, and that's wind and solar, not large hydro, and still be reducing their overall electricity bill by about 20%. So it's basically, it all makes economic sense now. The green thematic is self-reinforcing. Yeah.
Tim, any last words?
Yeah, I think we've been focusing, most of the conversations have focused on EV batteries. And I do think that, energy storage batteries in terms of chemistry and also demand is something to keep an eye on. Certainly what happened in Texas this year has really, let's say, create, greater focus on, grid localization and potentially the need for energy storage batteries. And certainly as we see, more inclement weather, this trend could really catch on. And I certainly do think for energy storage battery perspective, where you don't have the space and the weight constraints that you might have with an electric vehicle, that a lithium iron phosphate battery would make a lot more sense. And this is a place where there could be, market share. So I do think this is something, with all the focus we have on EV, that a lot of investors have taken an eye on what's happening in the ESS space. So I would just kind of highlight to kind of keep an eye on that space and potential demand upside, and also the fact that if we are getting into a tight situation with battery cell supply, of course, that these are competing for the same type of battery cells, which yet again could be another argument for, LFP going in, more LFP going into energy storage battery cells than what we have today.
Great. And Henrique, any last thoughts?
Yeah, it's hard to be the last one. No, I think they covered pretty much all the key aspects. I would just highlight something that is also directly related to the mining sector, and it is that I'll be curious to see how the OEMs will react or act, whatever, going forward related to the ESG aspect of things when it comes to securing, let's say, ethically sourced raw materials or battery metals. I think ESG has been an increasing concern across the board in many industries, not only talking about the automotive sector or the EV side of things. But in the end of the day, it's directly correlated, right? It makes no sense to produce an EV if you will be producing so much CO2 on the mineral side of things. So not to mention other concerns such as, for example, child labor when it comes to cobalt and things like that. So I think it will be very interesting to see how the EV makers will act going forward when it comes to scrutinizing the production or the mining of battery metals.
Absolutely. So that just about wraps us up here for today. So that was a really insightful discussion on the future of batteries and what we can expect moving forward. So I want to thank all of our panelists for taking part today, and we hope to see everybody at an event again soon.
Thanks, Amy.
Thanks, Amy.